Nokia did not weaken because it lacked scale. It weakened because the basis of competition changed. For years, Nokia dominated global handset market share. Hardware efficiency defined advantage. Distribution networks reinforced leadership. Margins were stable. When smartphones evolved into software platforms, the architecture of competition shifted. Operating systems became strategic control points. Ecosystems mattered more than devices. Internal divisions slowed software integration. Strategic alignment fractured. Competitors consolidated around unified platforms. Market share eroded rapidly. In 2013, Nokia sold its handset division to Microsoft. The failure was not manufacturing weakness. It was structural misalignment with a platform-based competitive model. In the early 2000s, Nokia stood as the dominant force in the global mobile handset market. The company's devices appeared across nearly every geographic region and price segment. From Europe to Asia and across emerging markets, Nokia phones defined the mobile experience. Distribution partnerships allowed the company to reach operators in more than 100 countries. Carrier relationships strengthened Nokia's ability to scale globally. Supply chain efficiency allowed devices to move quickly from factories to retail channels. Product cycles were disciplined and predictable. Hardware reliability reinforced consumer trust in the brand. Battery life and signal performance consistently ranked above competitors. Manufacturing efficiency enabled strong margins across multiple device tiers. Nokia's industrial design became recognizable worldwide. The company released dozens of handset variations tailored to specific market needs. Entry-level devices captured mass adoption in developing markets. Premium models targeted enterprise and professional users. This segmentation strategy increased overall shipment volume. High unit sales reinforced economies of scale across production lines. The company's manufacturing network operated across Europe and Asia. Large production facilities maintained consistent output capacity. Component sourcing benefited from long-term supplier relationships. Operational efficiency allowed Nokia to manage cost pressures effectively. Retail presence expanded through both independent stores and carrier outlets. Brand recognition strengthened with each product generation. Consumers often viewed Nokia as the default mobile phone choice. The company's engineering culture prioritized durability and reliability. Devices were designed to function across diverse network environments. Handsets often performed well even in regions with weaker signal infrastructure. Product quality reduced return rates and warranty claims. Strong operational performance translated into predictable financial results. Revenue growth remained stable throughout the early mobile expansion era. Market share leadership reinforced investor confidence. Industry analysts frequently cited Nokia as the benchmark for handset manufacturing. Competitors struggled to match the company's global distribution footprint. New entrants faced barriers created by Nokia's scale advantage. Carrier relationships further protected its market position. Retailers prioritized shelf space for Nokia devices. This visibility reinforced consumer familiarity with the brand. Hardware innovation cycles continued to deliver incremental improvements. Each product generation refined usability and form factor. Production capacity continued expanding alongside global demand. The company appeared structurally secure within the handset industry. Few analysts expected a rapid change in its leadership position. However, this stability depended heavily on hardware-driven competition. The industry structure at the time rewarded manufacturing scale and device reliability. Nokia had optimized its organization around these structural conditions. Strategic decisions reinforced the assumption that hardware leadership would remain decisive. Structural takeaway:
Market dominance built on manufacturing scale can appear stable when industry competition is defined primarily by hardware efficiency.
Nokia's competitive advantage during the early mobile era was fundamentally hardware-centric. The company invested heavily in industrial design and device engineering. Handset durability became one of Nokia's most widely recognized attributes. Devices were engineered to survive physical stress and extended usage cycles. Battery optimization allowed phones to operate for several days on a single charge. Signal reception performance remained a consistent engineering priority. These design features strengthened Nokia's reputation for reliability. Consumers often trusted Nokia devices in environments where network infrastructure was inconsistent. Hardware development cycles were structured around incremental product improvement. Engineering teams refined antenna design, component layout, and manufacturing precision. Production facilities implemented strict quality control processes. Large manufacturing volumes allowed costs to decline through scale efficiencies. Component suppliers aligned their production capacity with Nokia's predictable demand. This scale advantage allowed Nokia to introduce multiple product models each year. Product segmentation allowed the company to serve different price points simultaneously. Entry devices emphasized affordability and long battery life. Mid-tier models balanced design features with moderate pricing. High-end devices incorporated additional functionality for professional users. This layered product strategy expanded Nokia's total addressable market. Hardware differentiation remained the central driver of competitive positioning. Consumers often compared phones based on build quality and durability. Software capabilities were considered secondary during this period. Operating systems primarily served to enable basic device functions. Symbian OS powered many Nokia smartphones, but remained tightly linked to hardware. Software development cycles followed the constraints of device engineering timelines. Innovation typically focused on physical form factors and component upgrades. New keypad layouts and compact device shapes attracted consumer attention. Engineering teams competed internally to deliver smaller and lighter handsets. Product launches emphasized craftsmanship and reliability rather than software ecosystems. Marketing campaigns highlighted battery endurance and device durability. Carrier partners valued phones that minimized network compatibility issues. Hardware reliability reduced support costs for telecom operators. This alignment strengthened Nokia's relationships with global carriers. Retail sales staff often recommended Nokia devices for their dependability. Hardware performance therefore reinforced both brand strength and distribution leverage. Profit margins remained healthy because production scale reduced per-unit costs. Operational efficiency allowed the company to maintain stable earnings. Analysts frequently described Nokia as the most efficient handset manufacturer in the industry. However, this model depended on competition remaining hardware-driven. The company's organizational capabilities were optimized for physical device production. Software development remained structurally secondary within the firm's priorities. As long as hardware defined advantage, this structure remained effective. The emerging smartphone transition would begin challenging this assumption. Structural takeaway: when organizational capabilities are optimized for hardware efficiency, a shift towards software-driven competition can expose structural misalignment. During the mid-2000s, early signals began emerging that the mobile industry was evolving beyond traditional handset design. Advances in mobile processors gradually expanded the computing capabilities of handheld devices. Consumers began using phones not only for calls and messages, but also for data services. Mobile internet access slowly became a meaningful feature rather than a novelty. Email integration started appearing in business-oriented devices. BlackBerry devices demonstrated the demand for integrated communication platforms. These developments suggested that phones could evolve into portable computing systems. However, many industry participants initially interpreted these features as incremental enhancements. The dominant competitive framework
still prioritized hardware engineering. Manufacturers focused on improving cameras, screens, and battery capacity. Software remained tightly coupled to device architecture. Symbian OS powered a growing share of early smartphones, including many Nokia models. Symbian had originally been designed for limited computing environments. Its architecture reflected the constraints of earlier hardware generations. As device capabilities expanded, this architecture became increasingly complex to maintain. Software updates required coordination across multiple device configurations. Different handset models often required customized software versions. This fragmentation slowed development cycles. Engineering teams needed to adapt the operating system to a wide range of hardware platforms. Application development remained limited compared with emerging smartphone ecosystems. Developers faced barriers when attempting to build software across multiple Symbian variants. Meanwhile, internet companies began exploring mobile application models. Early mobile browsers attempted to bring web services to handheld devices. The experience remained inconsistent across different device models. These signals indicated that software could become a larger competitive factor. However, the industry had not yet fully reorganized around software platforms. Many firms still believed that hardware innovation would remain the primary differentiator. This assumption influenced strategic investment decisions across the handset industry. Product roadmaps continued emphasizing device form factors and physical design. Software teams often operated within constraints set by hardware engineering groups. Development timelines followed hardware production schedules. As a result, software capabilities evolved more slowly than hardware. The launch of new smartphone concepts began altering consumer expectations. Touchscreen interfaces introduced a different interaction model for mobile devices. Integrated application ecosystems started attracting developer attention. These shifts indicated a gradual transformation in industry architecture. Competition was beginning to move from individual devices toward integrated digital platforms. Companies that recognized this shift early began reorganizing their development structures. Others continued prioritizing traditional hardware advantages. This divergence would eventually reshape competitive outcomes in the mobile industry. The transition toward platform-based competition was still emerging, but increasingly visible. Structural takeaway. Early technological signals often reveal structural industry shifts long before incumbent organizations adjust their operating models.
As smartphones evolved, the importance of operating systems increased across the mobile industry. Software platforms began determining how users interacted with their devices. Application ecosystems gradually became central to smartphone value. Nokia's primary software platform during this period remained Symbian OS. Symbian had originally been designed for earlier generations of mobile hardware. Its architecture was optimized for limited processing power and memory constraints. As smartphone capabilities expanded, maintaining this architecture became increasingly complex. Different manufacturers implemented customized versions of the Symbian platform. This fragmentation introduced compatibility challenges for application developers. Software updates required coordination across multiple hardware configurations. Engineering teams often struggled to standardize development environments. The operating system therefore evolved more slowly than competing platforms. Developers faced difficulty building applications that worked consistently across devices. This reduced incentives for independent software developers to prioritize the platform. Meanwhile, competitors began emphasizing unified operating system environments. These platforms simplified application development and distribution. Developers could create applications once and distribute them broadly. This increased the pace of software innovation within those ecosystems. Users began valuing application availability alongside device performance.
operating systems increasingly determined the overall user experience. Hardware differentiation alone no longer defined smartphone competitiveness. Nokia attempted to modernize Symbian while continuing to support existing device lines. These efforts required balancing backward compatibility with new software capabilities. Maintaining legacy architecture increased engineering complexity. Internal development resources were divided across multiple platform initiatives. Some teams worked on improving Symbian. Other teams explored alternative operating system strategies. This fragmented approach slowed the company's ability to deliver a unified platform vision. Strategic debates emerged regarding the long-term direction of Nokia's software architecture. Different divisions advocated competing platform priorities. These disagreements complicated software roadmaps. Product development timelines became increasingly difficult to coordinate. Device launches sometimes preceded fully optimized software environments. Consumers encountered inconsistent user experiences across product generations. Application availability remained narrower compared with emerging smartphone ecosystems. Industry analysts began identifying software strategy as a structural vulnerability. Nokia still maintained strong device shipments during this period. However, the importance of operating systems continued rising across the market. Competitors increasingly positioned their platforms as integrated software environments. Platform control gradually shifted competitive advantage away from pure hardware manufacturing. This shift redefined the strategic foundations of the mobile industry. Structural takeaway: when operating systems become the primary control point of an industry, fragmented software architecture can undermine hardware leadership.
As software complexity increased, Nokia's internal organizational structure began influencing its ability to respond. The company had historically been organized around hardware product divisions. Engineering teams focused primarily on device design and manufacturing efficiency. Software groups often operated within structures built to support hardware programs. This arrangement worked effectively during the hardware-driven mobile era. However, smartphone development required deeper integration between hardware and software teams. Operating systems increasingly defined device functionality. Application ecosystems required coordinated platform strategies. Nokia's internal structure was not originally designed for platform-centric development. Multiple divisions maintained influence over different software components. Decision-making authority was distributed across several organizational layers. Strategic alignment therefore required coordination between numerous internal groups. This slowed the pace of software integration across product lines. Engineering teams frequently faced competing priorities across device programs. Some groups prioritized maintaining existing Symbian deployments. Other teams focused on experimenting with new operating system approaches. These parallel initiatives divided engineering resources. Platform roadmaps became increasingly difficult to synchronize. Product development timelines often negotiated across multiple departments. Organizational debates emerged regarding the future direction of the software platform. Different leaders advocated alternative strategic paths. This created uncertainty within internal development teams. Program coordination therefore required extended review processes. Software innovation cycles slowed relative to emerging competitors. External developers experienced delays in platform updates and documentation. Application support tools evolved more slowly than rival ecosystems. Some internal initiatives attempted to accelerate platform modernization. However, implementation required alignment across multiple internal units. Large organizational structures often struggled to adapt quickly. Decision latency became visible in software release schedules. Product launches occasionally proceeded with partially mature software environments.
Customer experience varied across different handset models. Internal communication complexity increased as platform strategy evolved. Management attempted to restructure development programs to improve coordination. However, large legacy organizations often change slowly. Meanwhile, competitors were building vertically integrated software ecosystems. These rivals aligned operating systems, developer tools, and application marketplaces. The contrast in organizational structure gradually widened the competitive gap. Nokia's internal friction therefore began affecting its platform execution. Hardware engineering capabilities remained strong throughout this period. However, platform competition required a different organizational architecture. The transition from device manufacturer to platform integrator proved difficult. Structural takeaway. When organizational design reflects a previous industry structure, internal coordination friction can slow adaptation to new competitive models.
As Nokia managed internal platform debates, competitors accelerated their platform strategies. The smartphone market increasingly consolidated around a small number of operating systems. Apple introduced an integrated model combining hardware, software, and application distribution. This architecture allowed Apple to control the entire user experience. Developers could build applications using a single standardized platform environment. Application distribution occurred through a centralized marketplace. Consumers, therefore, gained access to rapidly expanding software libraries. This ecosystem model strengthened customer loyalty to the platform. At the same time, Google introduced the Android operating system. Android provided manufacturers with a shared software foundation. Multiple device makers adopted Android across various handset models. This created a broad ecosystem of compatible devices and applications. Developers could reach large user bases through a unified software environment. Application innovation accelerated across the Android ecosystem. Platform capabilities improved through continuous software updates. These updates could be distributed across large device populations. The scale of these ecosystems began attracting more developers. More developers produced more applications for the platforms. More applications increased the value of the devices. This feedback loop strengthened the dominant platforms. Nokia's Symbian ecosystem struggled to match this pace. Application development remained more fragmented across device variants. Developer tools were perceived as less accessible. Software deployment processes were slower. The gap in application availability gradually widened. Consumers increasingly evaluated smartphones based on ecosystem depth. Hardware specifications alone no longer determined purchasing decisions. Platform participation, therefore, became the central strategic objective. Manufacturers aligned around operating systems that offered ecosystem scale. This consolidation accelerated market standardization. Industry dynamics shifted toward platform-based competition. Companies without strong software environments faced increasing pressure. Nokia's device shipments remained significant for several years. However, the surrounding ecosystem environment was changing rapidly. Application developers increasingly prioritized the largest platforms. Software services integrated more tightly with those ecosystems. Consumers expected seamless interaction across applications and devices. Unified platforms therefore strengthened switching costs for users. These structural advantages reinforced the leading ecosystems. Nokia's fragmented platform strategy reduced its ability to compete in this environment. Hardware capabilities alone could not offset ecosystem scale. Platform consolidation therefore reshaped the competitive hierarchy of the smartphone industry. Structural takeaway. When ecosystems consolidate around dominant platforms,
Companies without unified software environments lose strategic control of the market.
As platform competition intensified, the economics of the handset market began shifting. Nokia had historically benefited from strong margins driven by hardware efficiency. Large production volumes reduced manufacturing costs across device lines. Component procurement contracts further improved cost stability. However, the transition toward smartphones altered cost structures. Smartphone devices required more advanced processors and display components. These components increased per-unit production costs. At the same time, competition from platform ecosystems intensified price pressure. Manufacturers using Android began producing devices across multiple price tiers. Some competitors aggressively targeted mid-range market segments. This introduced pricing competition across categories previously dominated by Nokia. Device differentiation became increasingly dependent on software capabilities. Consumers evaluated smartphones based on application ecosystems and user experience. Hardware advantages alone became less decisive in purchasing decisions. This reduced the premium consumers were willing to pay for hardware reliability. Margins began narrowing across several Nokia product lines. Revenue growth slowed as average selling prices declined. Carrier partners gained more negotiating leverage with multiple platform alternatives. Retail channels began allocating shelf space to competing smartphone brands. Inventory cycles became more volatile as consumer preferences shifted. New device launches required stronger software functionality to justify pricing. Engineering teams, therefore, faced pressure to deliver both hardware and software innovation. This dual requirement increased development complexity. Operating system modernization required additional investment. Meanwhile, platform competitors expanded their ecosystem advantages. Application marketplaces continued growing rapidly. Software services such as navigation, messaging, and media integration became standard expectations. Consumers began viewing smartphones as software environments rather than communication devices. This shift reduced the relative importance of Nokia's traditional hardware strengths. Device life cycles shortened as smartphone innovation accelerated. Product refresh cycles, therefore, required more frequent updates. Marketing costs increased as manufacturers attempted to differentiate products. Profitability across the handset industry became less predictable. Nokia's scale advantage provided some cost resilience during the transition. However, scale alone could not fully offset declining margins. Competitive pressure intensified in both premium and mid-tier segments. Financial analysts began questioning the sustainability of Nokia's earnings model. Market expectations shifted toward companies controlling software ecosystems. Hardware manufacturers without platform leadership faced structural margin compression. This pressure continued increasing as smartphone adoption accelerated globally. Structural takeaway: when industry value shifts toward software ecosystems, hardware-focused firms often experience margin compression despite manufacturing scale. As smartphone adoption accelerated after 2007, global handset market share began shifting rapidly. Apple's iPhone demonstrated a new model of tightly integrated hardware and software. Consumers responded positively to the touchscreen interface and unified operating system experience. Application availability expanded quickly through the App Store ecosystem. Google's Android platform simultaneously expanded across multiple hardware manufacturers. Android devices began appearing in a wide range of price segments. This multi-manufacturer ecosystem allowed Android shipments to grow rapidly. Together, these platforms reshaped the competitive structure of the smartphone industry. Nokia initially maintained strong shipment volumes due to its legacy distribution network. However, smartphone market share increasingly shifted toward the new platform ecosystems. Symbian devices struggled to deliver a user experience comparable to the new competitors. Application developers prioritized platforms
with larger and more standardized user bases. The number of available applications on competing platforms expanded quickly. Consumers increasingly expected access to those software ecosystems. Retail sales representatives began recommending devices with stronger application support. Carrier marketing campaigns emphasized smartphones built on the new platforms. Nokia's smartphone portfolio therefore began losing relative visibility in retail channels. Device reviews frequently compared software capabilities rather than hardware durability. User interface performance became a key evaluation factor in technology media coverage. Touchscreen optimization became essential for smartphone usability. Legacy interface frameworks within Symbian made rapid adaptation difficult. Some Nokia devices attempted to modernize the user interface through incremental updates. However, these updates could not fully match the responsiveness of newer platforms. The gap in application ecosystems continued widening. Consumers began migrating toward devices offering broader software compatibility. Global smartphone shipments increased dramatically during this period, yet Nokia captured a shrinking proportion of those shipments. Quarterly market share reports reflected accelerating competitive pressure. Analysts observed a rapid rise in Android device adoption. Apple's iPhone maintained strong demand within premium market segments. Symbian's share of the smartphone operating system market declined steadily. Nokia's leadership position in global handset shipments began eroding. Investors increasingly questioned the company's long-term competitive positioning. Strategic discussions within the company intensified as these trends became visible. Management explored several options for addressing the platform transition. However, reversing ecosystem momentum proved extremely difficult. Consumers had already begun aligning with competing software environments. Developers concentrated their efforts on platforms with larger user bases. The resulting feedback loop accelerated market share migration. By the early 2010s, Nokia's dominance in smartphones had significantly weakened. Device shipments remained substantial but were no longer industry-leading. The structural takeaway: when platform ecosystems reach scale, market share can migrate rapidly away from firms anchored to legacy technology architectures. By the early 2010s, Nokia faced sustained pressure across both its smartphone portfolio and broader handset strategy. Market share erosion continued as Android and iOS ecosystems expanded globally. Symbian's declining relevance created urgency around long-term platform decisions. Nokia's leadership concluded that a fundamental strategic shift was required. In 2011, the company announced a partnership with Microsoft. The agreement positioned Windows Phone as Nokia's primary smartphone operating system. This decision effectively ended the company's long reliance on Symbian. Nokia aimed to align its hardware expertise with Microsoft's software platform capabilities. The partnership sought to create a third ecosystem capable of competing with Android and iOS. Engineering teams began adapting Nokia devices to the Windows Phone environment. Product design emphasized hardware quality combined with Microsoft's interface architecture. Initial devices received positive reviews for build quality and industrial design. However, the Windows Phone ecosystem remained relatively small. Application availability lagged behind the dominant smartphone platforms. Developers prioritized platforms with larger user bases and stronger revenue potential. Consumer adoption therefore expanded more slowly than anticipated. Retailers often prioritized devices with larger application ecosystems. Carrier marketing also focused heavily on Android and iPhone products. This limited the commercial momentum of Windows Phone devices. Nokia continued shipping large volumes of traditional mobile phones during this transition. However, Smartphone growth increasingly defined the industry's future. Financial performance within the handset division weakened during this period. Operating margins declined as smartphone competition intensified. Research and development costs remained elevated due to platform transition efforts. Investors questioned whether the Windows Phone strategy could restore market leadership. Market share recovery remained limited despite multiple product launches. Strategic uncertainty continued affecting Nokia's valuation. In 2013, Nokia reached an agreement to sell its handset division to Microsoft. The transaction transferred Nokia's device and services business to Microsoft ownership. Approximately 32,000 employees moved to Microsoft as part of the deal. The agreement included manufacturing operations and smartphone product lines. Microsoft aimed to integrate hardware production with its mobile software platform. For Nokia, the sale marked the end of its direct participation in the handset market. The company retained its telecommunications infrastructure and network equipment businesses. This divestiture allowed Nokia to concentrate on network technology and licensing activities. The sale price reflected the diminished strategic position of the handset division. Industry observers interpreted the transaction as the closing phase of Nokia's smartphone era. A company that once led global handset shipments exited the device market entirely. The platform transition had fundamentally altered the structure of the industry.
After the divestiture of its handset division, Nokia began restructuring around its remaining businesses. The company retained its telecommunications network infrastructure operations. These operations included equipment used by mobile carriers to build and maintain wireless networks. Network infrastructure had historically been one of Nokia's core engineering capabilities. Following the Microsoft transaction, this segment became the company's primary strategic focus. Management initiated internal restructuring to stabilize the remaining organization. Corporate resources shifted toward network technology development. Research and development efforts concentrated on telecommunications infrastructure. The company expanded its work in radio access networks and mobile broadband systems. These technologies formed the backbone of global cellular networks. Telecom operators relied on such infrastructure to expand mobile coverage. Demand for network capacity increased as smartphone adoption accelerated worldwide. Nokia repositioned itself as a supplier to telecom operators rather than a device manufacturer. Strategic investment focused on long-term infrastructure contracts. Network equipment businesses typically operate through multi-year deployment cycles. This created more predictable revenue streams compared with handset markets. The company strengthened relationships with global telecommunications carriers. Infrastructure deployments often required collaboration with national regulators. Engineering teams worked on improving network efficiency and capacity. The rollout of fourth-generation mobile networks expanded equipment demand. Nokia continued developing base stations and network management software. These technologies supported mobile data traffic across global networks. The company also increased its portfolio of telecommunications patents. Licensing agreements generated additional revenue streams. Patent licensing allowed Nokia to benefit indirectly from smartphone industry growth. Competitors within network infrastructure included large global equipment suppliers. The company therefore needed to maintain strong research capabilities. Corporate strategy emphasized technological reliability and network performance. Infrastructure customers valued long-term equipment stability. Nokia also pursued acquisitions to strengthen its position in network technology. The company later acquired Alcatel-Lucent to expand its global infrastructure presence. This transaction significantly increased Nokia's telecommunications equipment scale. The combined company gained stronger access to carrier markets worldwide. Infrastructure business models differ significantly from consumer device markets. Product cycles are longer,
and less dependent on consumer fashion trends. Revenue streams depend on capital expenditure by telecom operators. These characteristics created a different strategic environment than the handset market. The company gradually rebuilt financial stability within the infrastructure segment. Industry analysts began viewing Nokia primarily as a network technology provider. The brand transitioned from consumer electronics towards enterprise telecommunications. This repositioning allowed the company to remain relevant within the broader mobile industry. However, the strategic identity of the company had fundamentally changed. Nokia was no longer a global consumer handset leader. It had become an infrastructure technology company serving network operators. Structural takeaway: companies that lose product leadership may survive by repositioning around adjacent capabilities within the same technological ecosystem. Nokia's decline during the smartphone transition illustrates how industry architecture can change rapidly. The company entered the smartphone era with enormous scale and manufacturing capability. Global distribution networks supported one of the largest handset operations in the world. Hardware engineering expertise had delivered consistent leadership for more than a decade. However, the competitive foundations of the industry began shifting toward software platforms. Operating systems became central coordination layers for devices and applications. Application ecosystems created network effects across users and developers. These network effects reinforced platform dominance once scale was achieved. Nokia's organizational structure had evolved around hardware manufacturing leadership. Software development therefore remained structurally secondary within the firm. When smartphones became platform-based products, this imbalance became visible. Competitors integrated operating systems, application marketplaces, and developer ecosystems. This integration allowed them to control both user experience and platform innovation cycles. Unified platforms also accelerated software iteration across devices. Application developers concentrated their efforts where user bases were largest. This further strengthened the dominant ecosystems. Nokia attempted several strategic responses to address the transition. Symbian modernization efforts attempted to extend the existing platform architecture. Later initiatives explored new operating system partnerships. However, ecosystem momentum had already begun consolidating around other platforms. Developer investment followed the largest installed user bases. Consumers gravitated toward devices offering broader application environments. These feedback loops accelerated the shift toward dominant ecosystems. Once platform ecosystems reach sufficient scale, reversing momentum becomes difficult. Hardware differentiation alone rarely overcomes ecosystem advantages. Industry leadership therefore migrated toward companies controlling operating systems. Nokia's manufacturing excellence could not fully compensate for platform fragmentation. Internal organizational complexity slowed software coordination during critical years. Strategic realignment occurred only after platform competition had stabilized. By that time, market share had shifted decisively toward competing ecosystems. The eventual sale of Nokia's handset division represented a structural exit from the device market. However, the company retained deep technological expertise in telecommunications infrastructure. This allowed the company to reposition within another layer of the mobile industry. Infrastructure equipment continued supporting the global expansion of mobile networks. Thus, the company remained indirectly connected to the smartphone ecosystem. The case demonstrates that technological transitions often redefine competitive advantage. Capabilities that dominate one era may become secondary in the next. Organizational structure must evolve alongside technological architecture. Failure to align structure with new competitive foundations increases strategic risk. Nokia's experience therefore illustrates a broader principle of technological disruption. Industrial leadership depends not only on scale, but also on architectural alignment. Structural takeaway: when competition shifts from product to platform, Architecture determines survival, and corporate collapse occurs when organizational structure fails to adapt to technological transition.